I would agree with you. It won't be a hockey stick return of rent growth, but our research is indicating that it's going to be pretty fast when it turns because there's going to be so few units reaching completion at the same time, more positive supply-demand environment.
Yeah,
All right.
I mean, we see that at the project level, where there was a very small microcosm of supply specific to a project or a bunch of lease-ups going on at the same time. When that inventory has gotten absorbed, since there's very little coming behind it, you are seeing these moments of a gap up in rent and really a pickup in the renewal rates. So there's certainly the potential for hockey stick. Our industry would be wise never to underwrite that. We've seen some of those underwritings in the past.
Everyone is being conservative right now, that's for sure. It's better to be a little on the safe side, but I also see a lot of folks that are too reticent, in my own opinion, this is just me talking, to get involved early and kind of roll the dice a little bit.
One thing to keep in mind too is when we're looking at rental data, typically you're looking at multifamily combined with build for rent. And so it is important to separate those out and really look at the competitive build for rent communities and how they're operating. What is their rent growth? What is their absorption? Typically at Hunter Housing Economics, we see that compared to multifamily, build for rent is still stronger. And that's going to depend on the market, but it is important to differentiate between those two data sets.
Good point.
Yeah, I think in the primary markets, the larger, Sunbelt markets, I think it's just important as you think about the distinctions of multi and build to rent. Where there is an oversupply in multifamily, operators and landlords are offering significant concessions, not a normalized amount of, let's say, 1 month, through a normal lease up. That's where you start to get into trouble, where you're seeing residents hang on longer in a multifamily lifestyle, even if it's not ideal for their family or situation, just because the economics and affordability are so compelling. Really what we just need to see ultimately is a normalization in multifamily, regular way permits and starts. And that should allow BTR to kind of separate again and beat a little bit to its own drum. And you see that in some of the secondary markets.
Yeah, that's right. We've got to keep on harping on that. The advantages that BTR offers is over multifamily, private outdoor space, fewer shared walls. And those things are extremely valued and really not overly abundant in a lot of markets.